Welcome, everyone. And we will be getting started with our virtual happy half hour in just a few minutes. And while we are waiting for folks to join the webinar today, just a reminder that today's session will be recorded and sent out later today. So you will get a recording of today's presentation on how to win friends and influence distribution and franchise partners. All right, we will go ahead and kick off. Again, welcome to the virtual happy half hour for June 11th. And today's topic is how to win friends and influence distribution and franchise partners. I am Michelle Richardson, Vice President of Sales Performance Research here at the Brooks Group. And this is a topic that is near and dear to our hearts here. We have a long and rich history of working with distribution, with dealer networks, franchises, both at the OEM and at the dealer distributor level. So we're excited to share some expertise, some data with you. And as always, I am joined by Russ Scherer, our Director of Sales Strategy Effectiveness. Hi, Russ.
Hi, Michelle. Great to join you again. And I agree, the decision about how a company is going to go to market, how to make sure that's effective, how to make sure that they're spending their money in the right places to get leverage out of those dollars and to build relationships with the people are critically important. And I look forward to sharing some of the ideas that we've seen about what works and a few stories about what doesn't work maybe as we go through this. Our sponsor this week is Impact Selling, and the new option you have of either being live in person, that is in our facility in Greensboro, or to continue to use virtual, where you can work through most of the day and then take a couple-hour break for training in terms of how to improve your sales skills. So we'll talk about that as we move through the program. But right now we want to start with what are some of the trends? What are some of the things that we see happening between manufacturers and their channel? And Michelle has, as always, pulled some great data and information for us.
Great, well, let's take a look. So for 2021, it's actually a very optimistic outlook for channel networks, distribution networks, and franchises. And I pulled some data from the 2021 Channel Partner Marketing Benchmark Survey. It was sponsored by Demand Gen, the Channel Marketer Report, Allbound, which and some other organizations that are tapped into that channel network. And so what they found in their survey of 115 business-to-business organizations across multiple industries is that 91% of companies plan to increase revenue directly attributed to their partner network. So they are looking at their partner network, whether it is a distribution channel, franchises, they're looking for this as a way to increase revenue in 2021. And 79% of organizations actually plan to increase the number of partners in their network. And so this could include independent resellers, distributors, managed service providers, dealers, franchisees. So these are direct organizations that can directly sell on behalf of their head organizations. And it may also include a growing area, which is referral partners and influencers. But again, 79% of these companies actually plan to not only increase their revenue, but actually increase the number of partners in their network. Only 5% of organizations surveyed actually want to decrease the number of partners in their network. So I think coming out of COVID, certainly the crazy year of 2020, this is an indication really that distribution channels, franchises are still a viable go-to-market strategy, although certainly things are different. So the one thing that we have to look at, though, is that 20% of these companies describe their programs to sell and market their offerings as very effective. So only 20% of them say they have very effective programs in place right now to grow that revenue or increase the number of partners in their channel or network.
That was
About
something.
14%. Oh, go ahead.
That was something that really struck me as well, Michelle. The commitment that people have, or let's say the expectation that people have about revenue growth, the commitment to grow more, but this idea that nags people about, well, maybe we're not as effective as we should be.
Exactly. And I think there's the realization that some investment is going to have to be made, and we're going to take a look at that data, but investment, in areas of training or in technology. So how do we shore up our network and our ability to communicate and really influence and drive that business through these partners? Because ultimately that's the challenge. That's the challenge we hear from clients is, how do I get my dealer network to sell more? How do I get distributors to recommend and sell my products versus a competitor's? So there is an acknowledgement that there's something of a lift coming this year in order to hit those aggressive goals. So as we just said, businesses are planning deeper investments to support their partners. And I think it's very interesting, 54% over the next 12 months, so this is coming up over the next 12 months, 54% are planning to invest in partner training. So that could be live training. It could also be some kind of learning management solution that's delivered digitally, but an acknowledgement that training needs to be a component. 47% are looking at channel incentives and program management. So how are we going to incentivize and compensate our partners for the return? Partner portals, 46%, partner relationship management, also in the mix, through channel marketing automation. So helping and supporting our channel partners, our distributors, and our franchises with the marketing efforts, and then channel data management as well, 24%. So we're seeing a mix of skill development, training, as well as technology, really to drive some of this, this increase in revenue coming up this year. So Russ had mentioned Impact Selling as our sponsor today. And one of the ways that we can really help influence our distribution network is through training. And Impact Selling is a good way to approach that. It is a sales process going from prospecting to closing. We are, as Russ said, delivering it now virtually and in person. We had our first in-person training this week here in our home office in Greensboro, and it was wonderful to see everybody. But from a distribution standpoint, we can address things like how to influence your distribution network. We have some OEMs who are rolling this program out to their dealer network, their distributor network, and as well as franchises. So a way to really consider how to up the skill set of your network, I would definitely consider Impact Selling. So if you are interested in learning more about Impact, producer Alan is going to put some contact information in the chat. Feel free to email contact@thebrooksgroup.com. All right, and Russ, what does everybody want?
So this is what everyone wants, right? Obviously, product velocity is what I call it. Units that just sort of fly immediately off the shelf. Reorders, very limited inventory on the part of the channel. Strong end user demand, on time payments. Boy, that's perfect. And I was reminded in putting this together early in my career. I interviewed for a position with a young startup company in the hard drive space, and the person who was interviewing me said, "Well, like, we are very close to signing an agreement with one of the major distributors in our industry," and he saw it as sort of this tornado effect, where that agreement to just go on the shelf was going to be able to pick up product and distribute it all across the country, and revenue is going to go sky high, et cetera, et cetera. And one of the things that I love is when people say, well, in a perfect world, and my experience is that we don't live in a perfect world. And so therefore, when we look at moving into the channel, product doesn't always just fly off the shelf. Sometimes manufacturers assume that the channel salespeople are going to be able to take a product that has absolutely no name recognition and no end user pull, and sort of focus on that as opposed to all the other products that that channel salesperson has been using to pay their bills and to grow their business over the years. And then sometimes manufacturers will, or sometimes channel salespeople have the perception that in order to be successful, manufacturers are going to sort of prime the pump, bring them some deals that they can fulfill and they can make it easy to sell. That if they have a tough client, that the manufacturer is going to give them exclusive special pricing, which usually means low pricing, by the way, and to treat them a little, quote unquote, more fair than all the other channel partners. And so the question we really want to ask ourselves is, how do we make this work? How do we together go build a successful model? And we've got a 3-step process here that we've thought through. Number one really comes down to analyze. It all starts with a really good look from both sides, both from the manufacturer side and the channel partner side, of what value is going to come to the business based on this relationship. Now, I would say that over the last 10 or 15 years, the equation for the channel has changed the most. For example, we worked with a client one time who worked through distribution in the paper industry, and every town had multiple paper distributors that had stock and could provide inventory very quickly. And then a low-cost competitor called Uline entered the business, and Uline approached it differently. They didn't have local warehouses, but they had overnight delivery. They built large trucking capability to deliver units and took the business away from a lot of those paper distributors. It's really important that they understand as a channel partner, what expertise do you have and what can you bring? Manufacturing side, the other question is, what do you bring to the shelf? I had a client one time who sold fluorescent tubes, that go into 2x2 and 2x4 lighting troffers. And they thought, wow, we can sell these to our OEM, so we could sell them through the channel as well. And they pumped them up and sold them into distribution, and they went nowhere. And the reason was they didn't have any real advantages. And so someone comes to the counter and says, I need some fluorescent tubes. And they said, sure. Do you want Philips? Do you want GE? Or do you want this company you've never heard of? And as a result, it didn't work through. So we need to understand that an undifferentiated product is just going to sit on the shelf. The other thing that I like to do when we think about value is to understand that a lot of the value that's added is intangible. Is it locations that people are? Is it some kind of special delivery service that they've got, or a unique way to package or to kit that can take labor out of the costs of those products when they're delivered on site? And so I really look for channel partners that can look at how they can take my product or service, package it in a way that they can deliver a better solution to the customer, and quite frankly, move dollars from, say, labor costs or scrap costs into a more expensive package solution from that distributor. That's great value add. And then the other part of this is it sustainable? Is what they're doing today able to be sustained over the long run? We see a lot of people investing in technology right now, and the question is your partner going to be able to keep up? Is your manufacturer going to be able to keep up? Most of the time, manufacturers are wooing customers built on a roadmap. I have this great product, and there's a lot more coming down the line. But we need to also ask our partners, how are you seeing your business evolve and what's going to happen there? And then the second piece there is share of wallet. And I think this is an area where people get out of alignment the most. I worked, for example, for a networking company one time. We were 15% of the revenue of one of our largest competitors. They had a more broader product line. What we found was where we could go in and compete with a unique product, we won. Where they had a larger overall solution because of their back-end rebate systems, because of the promotional dollars they could spend in the channel, they won. And so 15% was still a good number, but it took us a while to sort of rationalize that if we were going to grow share, we had to overcome this competitor's just size and advantage. They were a major contributor to revenue to the partner. And so we've got to look at that. Same with our channel partners. Are we seeing that when we get added to their line card, that we're going to be an important piece of their line card, or are we the third or fourth option? And if we're the third or fourth option, maybe even the second option, what's going to make us different from the product their customers are used to buying, their salespeople are used to selling? And then the last one is, have you aligned pricing up with the value that's being added? Again, I've done some work recently with people that think, well, we should get the same pricing as those channel partners that don't stock, for example, when therefore the back end of the service is put on you. This is especially true with people who are opening up websites. They expect that they'll generate the business, ship it to the manufacturer does all the distribution, and they want exactly the same discounts as those people who are traditional, put product on the shelf and resell it. And so you have to understand kind of how you're going to divide that and how it plays out in pricing. The next piece is, how do you segment the business? Do you segment it by product or by size of customer? I've worked for companies before where we wanted to handle the large accounts direct, let the channel cover the smaller ones. But what usually happened in those accounts was the cost of covering those smaller ones in the products we were selling, at least, were too high for it to be profitable for the channel partner. So they wanted to go sell into our larger accounts, and you ended up with a natural conflicts that set up. So think about the conflicts that you're creating. And there is no bigger conflict today than the conflict with Amazon. And this is one of those deals where Amazon Business, Amazon Wholesale, you ask the question, if I sign with Amazon, do the rest of my channel partners hate me? And if I don't sign with Amazon, does that hurt my business? And I will just tell you from our experience in a company that I had worked with a few years ago, it was a very difficult decision. We knew that our partners would be upset. And so we were very clear and communicated with them that we went to Amazon. We went to Amazon with a pricing strategy that would always put us above what other channel partners were selling at, because we found that we could get to a new segment of the market. We got to, in this case, contractors who worked all day, smaller contractors, placed their orders at night for delivery the next day or 2 days later. And they didn't do as much cross-organizational price shopping. They were tired at the end of the day. So they went to Amazon as the easy solution and just ordered. So make sure your pricing strategy works. And I don't think it's the channel killer, but I do think it will kill the weaker partners and it will cause the better partners to get stronger. And then last of all, slicing and dicing. We kind of touched on this a little bit, but how do we go to the right channels for the right products to the right people that optimize it? And I think, Michelle, frankly, that's why some people are frustrated with their channel partners or don't think they're effective, is they just have misalignments between what the channel partner is good at, what their product is good at, and how those come together.
I 100% agree.
Number two, let's take a look at kind of how do we optimize then the channel, and we go forward from that. And we had a question come in, is this from the partner's perspective or the vendor's perspective? I'm trying to share a little bit of both. I have to admit that for most of my career, I was on the manufacturer side. So I tend to look at things from that perspective, but I'm really trying to bring both into this discussion. Around optimization, and this is interesting to me. I believe that the most successful thing you can do is what I call train one more time, because it's important that your channel know how to sell your product, unless for some reason it just has such strong end user brand recognition, or end user meaning whoever's buying it, that they're just going to call and buy it directly. And the study that Michelle quoted earlier said only about 73% of manufacturers even offer channel sales training, which to me is incredibly small. And this includes things like we need to do launch packages, particularly with point of presence for like point of sale and point of install as well. Historically, these have been done through lunch and learns, but there's a great way to leverage technology. And I want to encourage you to think about this. The information that people need to know to sell is best delivered just in time when they have that interaction with the client. And so I have seen packaging with QR codes that help the installer. They maybe haven't done it before, so they hit their phone, they look at a short video, they're ready to install the product. I've seen it where there's enhanced sales information, so that rather than expecting the counter person or the distribution salesperson who may cover 30 different lines to understand all the nuances, you can just click on the QR code and get the quick summary of what this product does and why it's superior to some of the other offerings that are on the marketplace. I also would encourage people, this idea of sell once, no returns means how do you make it easy for the channel partner? Every time a product comes back, you can almost count on that being a loss leader or a loss of revenue, a loss of profit for a distributor. They tend to work, or distributors at least work on fairly small margins, but even channel people, when they've got to go in and burn their time dealing with an issue as opposed to selling new business, it's costly. And so how do you make sure that your products go in, and if there is an issue, are easy to resolve? People can get to the solutions quickly. People can return maybe directly to the manufacturer as opposed to stockpiling in the warehouse. You need to design your system so that it's friction-free, manufacturers and channel partners. You need to help them be able to understand where you make money and where you don't, and therefore how you together can shift costs to optimize and make things important. And then the last one that I would just touch on. Oh, one other point about sell once, no returns. Try to make sure the packaging size is right. I have seen distribution partners who say, boy, it comes best in a box of 24, but all the customers are buying them in boxes of 6. And so again, if you can make yours easier to sell off the out of the back room as opposed to having to do a lot of repackaging, that's going to make it easier for you. It's going to make it more profitable for the distributor, and therefore kind of less friction throughout the entire channel. And then the last piece here is information, if you will, is the currency of sales, right? It's what it takes to be successful. In a couple of different areas, I want to just point to some examples. From the back office perspective, trying to keep partners' databases, trying to keep their information up to date is really difficult. Sometimes companies will use partner portals, but again, according to this February 21st survey, less than half of the people interviewed had the ability to go into a portal as a channel partner and get information around what's available in stock or what current information is. I got a chance one time to work with a company whose name is Idea, and they have a product called the Idea Connection that is used specifically for electronic and electrical distributors. But it was a middleware product. You updated it with your latest information, and then literally hundreds of different partners were able to get new product information, price changes, the latest images, everything that was needed for that person to be successful with your product. It always amazed me at times when we would go back through organizations and ask different groups, product groups, to like update the images or update the data sheets. And they saw that as a manufacturer as sort of an extra burden they shouldn't have to bear. But I saw no way that your distribution partner was going to be successful if they didn't have the latest information. And then one just quick thing on information for the salespeople. Again, the report says only about 71% of the people provide paper data sheets and paper collateral. But there's some interesting things going on here from a electronic perspective. The National Electronic Manufacturers Rep Association developed a really interesting iPad app called Rep Files. And in it, there's an automatic sync function. So if I'm a representative and I'm sitting in front of a customer and they ask about my product, I can bring it up and get all the latest information, share with them the latest data sheets, have the latest pricing, and can automatically out of that app email to the customer the latest information. So I don't have to go back to my office. I don't have to go pawing through a big file folder full of literature. I can just deliver the latest information immediately there. And I think it's a great tool. I think there may be others of those tools out there. So I'd encourage you, if you're working with a multiple group of channels, see if there's some tools that can simplify that. As a manufacturer, you update it once and it gets distributed to everybody. Counting on the channel to take paper, distribute the latest information or the latest presentations electronically to everyone is a losing cause. If you're a manufacturer, ask yourself, how many of your salespeople are always updating to the latest company presentation or product presentation versus what may exist on their hard drive? The problem just gets worse when you're a channel partner and you've got multiple lines. And then finally, just the last part is how do we how do we really move forward in terms of driving the channel? And I would recommend that you work on creating a partner growth plan. Most partner growth plans that I have seen in my experience start with a target number that we're expecting the partner to deliver in terms of revenue, some kind of pricing or maybe back-end incentive that as the partner grows, they're going to get maybe some additional either funding or financing. But really, a good partner growth plan has a lot of different aspects to it. Who's going to do what? Make it very clear who's going to be in charge of generating leads, who's going to drive end user demand. And if the manufacturer is driving end user demand, which of those kind of leads are they going to push back to the partner, to a specific partner? A lot of people are doing end user demand creation and then doing fulfillment through the channel, but which channel partner and how does that work? If you're going to do channel marketing, how do you access funds? How do you earn funds? How do you make it easy? And does it cover the basics? A lot of times people like channel programs that are only focused on selling their products and their logoed kind of activities, but maybe the partner is doing an overall day where they're bringing in lots of different customers to see lots of manufacturers. They want you to buy lunch or they want you to contribute towards that. And are marketing funds available for that or not? Again, from the research Michelle quoted earlier, only about 50% of partners are funding mutual activities or mutual events. And that's an opportunity. If Lunch and Learns work for you as a manufacturer, they work for the channel. Incentive plans are great, but recognize who you're rewarding. Sometimes you're looking at being able to have some kind of a spiff or a bonus for the person who's doing the selling. Back-end rebates feed the corporate coffers. So make sure that your incentive plan is aligned with driving what you want manufacturer in terms of moving out. And then have a simple feedback channel. You want the information that your partners, salespeople are finding and learning to flow back into the organization for the manufacturer. And manufacturer, you want the information you have to flow out to the customer. So whether that's a simple text update or a weekly mail update, whatever it might be, information has a very important time quality to it when it comes to selling. And so figure out a way to make it simple and push information through. I'll just give you an example. I was working with a client and they were having to go out and talk about a price increase, which is pretty common these days. And I asked them, I said, what do you tell your customers about why this month? And they go, oh, well, it's January. We always have price increases in January. And I went, nah, that doesn't make any sense. You've got to have a better reason. Is it because of labor, because of cost of goods, is it because of transportation? You owe your end user an explanation for why prices are going up. And so channel salespeople, you should be able to ask the manufacturers, why are prices going up? And you should be able to communicate back in terms of what's happening. I've seen manufacturers who have a pattern of, say, a 6 or 7% increase at some point in the year. And then they think by, in a quarter, they'll maybe be able to net 3% out of that. And you go through a lot of ill will, making your channel salespeople go out and deliver something that they know you're not going to stand behind and that you're ultimately going to back off. So think about how those go together. Think about how you align the teams so that there isn't channel conflict like I was talking about earlier, but instead they're able to work together and go get business. And then ultimately clear, consistent metrics, not just what they're delivering from a revenue perspective, but it's to both partners' advantage to look at the conversion rates from lead to quote to order. Because improving those, whether you're the manufacturer or whether you're the channel partner, is going to have the most impact on your business. So manufacturers, understand what those are in your channel and be able to work with your channel partners to say, look, you're falling, your rates are not as good in these areas, or you're better than other people in these areas. What are you doing? And channel partners, understand what it is for your manufacturer so you can go back and say, look, we're seeing a conversion rate much lower for your line than for any other line we carry. Why is that? Let's talk about what that might be. That's how you build feedback together and how you build success. And if you can get those metrics better, so you're converting at better rates, both partners are going to be happy, and that's what drives success. So that's kind of our quick summary of ways in which to be successful in the channel. We'll open it up to questions right now. We do have one question about software companies and teaming fees. I'll have to admit, it's not a question that I have personally dealt with right now. But if you'd like to email, send your email to the contact@brooksgroup.com, I'd be glad to do some research and answer that question when I get some additional data. But the idea of teaming fees is just not something that I have personally had to deal with here in the last few years. Any other questions that we can answer? The one thing I guess I didn't mention, let me just answer this, which is how do you make your partners more successful? It goes back to that idea of training, train, and train again. And that's not just because we're a training company. But as Michelle mentioned, we actually have had a number of instances where the manufacturer will set up a program that for its reps, they will do sales training because they understand if they can make those franchisees, in most of the cases, it's franchisees or more exclusive partners of theirs. If they can help them be more successful, they both bring value to that franchisee or that dealer. They also bring success back to the manufacturer. So as you put your channel incentive plan together and begin to think about ways to work together, the provision of sales training might be a good way to be able to do that. Any other questions?
I think we are question free right now, Russ.
One just popped in, and it was around online training versus instructor or in-person training. Well, I'm going to answer that question in terms of going forward, because clearly the last 18 months or 15 months, things have been really strange. But I think what's effective, or what we've seen as effective, is a combination. Maybe earlier training, if you can be a part of of sort of the boot camp of new salespeople coming on board, boy, it's great to be in person. And then you can use the online training to kind of reinforce it. Otherwise, online training, effective online training, meaning it's engaging, it has some ability to do testing for retention. It's not just something that somebody starts up on their computer and then they go off and do other things and come back at the end and click, yes, I completed it. It's sometimes really good for basic training. And so you can design a strategy. And in fact, we're doing this for a number of our clients that starts with an assessment of skills, focuses on some of the basic training skills, and then at annual events, do some reinforcement, whether it might be on negotiation, whether it might be on account management, whether it might be on better questioning and listening skills, all of those things. So I think both fit. I think both are going to fit in any kind of training sales curriculum going forward. What we see, if you look at just the pure data, not to speak for Michelle, but she can fill in and add some more here too, is that spaced training, virtual training where I'm doing a little bit, practicing it, doing a little bit more, actually has higher retention than if I just try to do it all in a couple of days. But people tend to like in-person training better because, let's face it, salespeople are people, and they like to be with people. They don't like to be with screens. So Michelle, I don't know if you want to add anything to that in terms of your thoughts, but it's a great question.
You're right. Yeah, and I totally agree. And the data is showing that spaced effect does drive retention and effectiveness. So moving forward, I think that hybrid type approach is really going to stay relevant, and it's going to be an important part of your training. One thing that I would add to your comment too, Russ, specifically as it relates to distribution or dealer networks, channel partners, is that what we have seen when vendors or OEMs, manufacturers do sponsor or offer some type of training for their network, there's usually some kind of metrics that are tied, or some accountability tied to dealer metrics. There's some kind of cost split, something that just really does help to drive that accountability so that the dealers will participate, or your distributors, your channel partners will participate and will take it seriously. So I would encourage, if you are thinking about that from a vendor level, how do you drive that engagement and accountability so that your partners do take take part in it. And that is, again, something that we've had a lot of experience really making sure that, that you get that engagement.
Great point. You sometimes forget that which is most recent, but it seems like Michelle and I have been on calls nearly 3 or 4 times a week these days, talking about how do I define KPIs for training? How do I make sure it's effective? How do I make sure people are really getting results out of it? We had another question come in, Michelle, while you were answering around professional services. How do you deal with channel partners in professional services? And again, there's no one right answer. I think it's going to vary based on the product and what you're looking for. I think it goes back to that idea or the comment I made about value. Is the channel going to be the one who provides the service, or is it going to come from the manufacturer? And whoever is, of course, providing the manpower clearly should be the one who's getting the majority of the compensation on it. If you, as the manufacturer, want to provide it and just want to pay a finder's fee or some kind of a fee to your partner, and they have no, so we say, skin in the game, then that's great money for them and a great use of getting your people and skills out there. The big challenge with professional services always is consistency, and having a good communications channel so that your partners understand this is going to be a good experience for the customer. And even though it's your mutual customer, if it's the channel salesperson whose face is on the line, it's their customer. How do I make sure that's going to be a good experience? And so that's kind of what you have to overcome. In terms of whose paper is it on, to me, that's a question, again, of your strategy. Is this them being a channel for you and your brand's first, their brand is second, or the other way around? And a lot of times that has as much to do with whose brand is dominant, whose brand is opening the door, and whose brand is really bringing that end user to the table. A good friend of mine used to say about the sales business, and he was from the South, but he would say pigs get fat and hogs get slaughtered, right? So the moral of the story is, together we can both grow great businesses, but when we start to try and get it all, sometimes we can end up dead on the threshold. So again, think about where the value is coming from. Think about the brand value of each partner. Think about the consistency of delivery of the service, and ultimately think about what moves the needle. Because I used to always try and explain to people, sometimes 80% of something is better than 100% of nothing. So just kind of to wrap up quick, what are the best practices? Understand the value each channel is providing, each step of the process, from lead generation to warehousing to sales to delivery, and compensate appropriately. And as a channel, think about where you do bring value and seek that which is most valuable to the manufacturer. Focus and communicate on that. Only add complexity in terms of this slice, dice, size of customer, product line, et cetera, where you have the ability to manage it. I didn't mention this, but we can create very complex distribution problems that consume us with issues and management challenges, and we don't have time to do anything else. So the more complex something is, the more hesitant my experience is channel partners are to buy into it. And so really make sure that complexity is needed. Make sure you're training, whether it's in person, whether it's virtual, whether it's QR codes that jump you to YouTube videos. Again, frictionless, that's the key word there. Leverage technology for the delivery of information, and then have a partner growth plan that is very clear in terms of what you're asking of your partner, how you're going to measure it, and how you're going to reward and pay them. And just like a salesperson, they want to understand, what do you expect from me? How do I go be successful? And when I'm successful, how do you deliver it? From a manufacturer's perspective, from a channel perspective, it's exactly the same thing. What's expected of me? I'm going to go deliver this, and I want to be seen as respected and seen as a person who's helping your company. So that's my perspective and our thoughts for this week.
And thank you all for joining us. We will see you on Friday, July 16th for our next virtual happy half hour. And stay tuned for the topic. Thank you so much for joining us.
All right, everybody. Have a great weekend.